Welcome to Talk Tickers, where we cut through the earnings call noise and give you the pure signal.
Glad to be here.
Today, we're diving deep into BioNTech, that's ticker BNTX, and their recent Q2 2025 earnings call.
Yeah, this was more than just a standard update, wasn't it?
Definitely. It felt like watching a major biotech player make a really clear strategic move.
And the market seemed to like it. There was a pretty positive reaction.
Exactly. So we're going to unpack why. We'll look at the strategy behind the scenes, the big financial shifts, and what key catalysts you should be watching.
Right. It wasn't just about the numbers themselves, though they were good. It felt like investors were buying into a whole new narrative for the company.
Absolutely. A reevaluation, almost.
Sure.
So let's kick off with a quick look at those headline Q2 results.
Okay.
Revenue first. A really substantial beat here. They clocked in at $261 million.
Which is what, more than double year over year?
More than double, yeah. And it blew past the consensus estimate of $151 million. So like $110 million better than expected.
Wow. Okay. And EPS?
Also strong. Both GAAP and non-GAAP were notably better than analysts thought. GAAP EPS came in at negative 1.60, but the consensus was way lower at negative 2.28.
So a 0.68 beat there.
Right. And non-GAAP was even more impressive, negative $1.57 versus a negative $2.52 consensus. That's almost a full dollar beat per share, 95 cents.
And critically, it wasn't just the top line, right? The net loss improved significantly, too.
It did. Net loss was $387 million. Now, that sounds like a lot, but compared to the prior year.
Which was over $800 million, I recall.
Exactly. $800 million.
Yeah.
So, yeah, cutting that loss by more than half shows real progress on the cost side, better operational efficiency.
And the cash position. That always stands out with BioNTech.
It really does. Fortress-like is the word. They're sitting on nearly $16 billion in cash and investments as of the end of June.
$16 billion? That's just an incredible war chest, especially in this market. It gives them a really solid foundation.
No kidding. And the market definitely noticed that. Shares jumped pretty significantly in pre-market and early trading right after the call.
Added about, what, over $1 billion to the market cap?
Roughly $1.4 billion, yeah. And we saw trading volume spike to more than double the 30-day average, plus a noticeable jump in out-of-the-money call option activity.
Okay. So some people are definitely betting on more upside. Clear bullish signal there.
For sure. But like you said earlier, this reaction wasn't just about the quarterly numbers.
No, it felt much bigger. It was like a validation of the strategic direction management laid out.
Right. They're making this explicit pivot, moving away from being seen just as the COVID vaccine company.
Even though that's still profitable.
Right. Very profitable. But they're positioning that franchise now as basically funding the future.
And that future is Immuno-Oncology, building a diversified powerhouse there.
That's the core message. Okay, so let's unpack that pivot. What does this Immuno-Oncology powerhouse actually look like?
Well, their stated vision is translating science into survival. They want multiple approved therapies tackling cancer across the board, from adjuvant treatment right through to late-stage refractory cancers.
So a really broad ambition. It's not just dipping a toe in. It's a full-on strategic shift, using that mRNA expertise they honed during the pandemic.
Exactly. And the big question is, how are they actually doing it? It comes down to some really significant deals and, importantly, pipeline validation.
Like that huge Bristol Myers Squibb deal.
Precisely. The $11.1 billion deal for their bispecific antibody, BNT327, that included a massive $1.5 billion upfront payment.
Which is huge.
It is. And it does two things. Validates their lead oncology asset in a big way, and it funds those expensive late-stage trials without needing to issue more stock and dilute shareholders.
Which is critical in biotech right now. Capital efficiency.
Absolutely. And then there was also the CureVac acquisition.
Right, the $1.25 billion all-stock deal.
Yeah. That move strengthens their own mRNA platform technology, adds more expertise, and really deepens their oncology toolkit overall. It's about building that foundation.
Okay, so they're making big moves, bringing in assets and validation. What about the clinical progress? Let's talk BNT327 momentum.
Right, they're not just talking, they're executing. BNT327 is moving into 2 global pivotal phase 3 trials now.
2 phase 3s.
One in first-line small cell lung cancer, another in first-line non-small cell lung cancer. And they're planning a 3rd phase 3 in first-line triple-negative breast cancer, or TNBC, later this year.
Wow. Those are all major indications with significant unmet need. Moving into pivotal trials is a huge step forward.
It really is. And they shared some encouraging interim data to back it up, which is what investors want to see.
What did that data show?
For small cell lung cancer in a phase 2 trial, they reported a median overall survival, or OS, of 16.8 months.
Okay, 16.8 months. How does that compare?
Well, the standard of care benchmark is around 12.3 months, so that's a pretty meaningful improvement, potentially extending lives significantly.
That is significant. And for TNBC?
Also encouraging, they showed a 69.7% overall survival rate at 18 months, and importantly, that was regardless of PD-L1 status when BNT327 was combined with chemo.
Interesting. So compelling early signals there, too.
Definitely. These suggest real clinical benefit in tough-to-treat cancers.
Now, I also noticed they talked about novel combinations. That seems like a key part of the strategy.
Absolutely. I think this is one of the most exciting parts. They're exploring combining BNT327 with antibody-drug conjugates, ADCs.
Okay, like which ones?
They mentioned BNT323, which targets HER2, BNT324 targeting B7H3, and BNT325, which goes after TROP2.
So hitting multiple important cancer targets there.
Right. And the preclinical data looked good, showed superior anti-tumor effects compared to using just one drug. But even better, the early clinical data suggests these combos have a manageable safety profile and show meaningful activity.
Manageable safety is key for combos.
Crucial. And here's the really ambitious part. They think these combinations could potentially replace traditional chemotherapy in some settings.
Replace chemo. That would be
It's like a
transformative.
monumental shift, yeah, if they can pull that off.
And it's not just ADCs, right? They're still pushing their mRNA cancer vaccines.
Correct. They have both personalized approaches, the iNest platform, and off-the-shelf ones called CureVac.
Any updates there?
Yeah, the FixVac program for melanoma, BNT111, actually met its primary endpoint in a randomized phase 2 trial. They're planning to present the full data at the upcoming ESMO conference.
Okay, so progress across multiple fronts, bispecifics, ADCs, mRNA vaccines. It's a really diversified oncology push.
Exactly. They're using that cash to attack cancer from many different angles.
Which brings us to the financials again. This kind of ambition costs money. How are they managing the spending?
That was another key focus on the call: financial discipline. And the numbers back it up. Q2 R&D expenses were actually down 13% year over year, coming in at $509 million.
Down, even with all this activity.
Yeah, and SG&A expenses were down even more, 25% year over year, to $137 million.
So that signals some real discipline. Reprioritizing programs, tightening the belt where needed.
Exactly what you want to see during a big strategic shift like this. Careful execution.
And that discipline allowed them to reaffirm their full-year guidance for 2025.
Yes, they're sticking with the previous guidance. Revenue between $1.7 and $2.2 billion, and R&D spending between $2.6 and $2.8 billion.
Okay. But they did mention something about the timing of that revenue, right?
They did. They clarified it's expected to be heavily back-end loaded, weighted towards the last 3 or 4 months of the year.
Why is that?
Mostly driven by that big upfront payment from the BMS deal hitting the books, plus the timing of COVID-19 vaccine shipments, which also tend to be later in the year.
Got it. So if you're tracking their quarterly numbers, don't panic if Q3 looks lighter. Expect a strong finish in Q4.
Precisely. And speaking of the COVID vaccine, they gave an updated outlook there too, a bit more conservative.
Lower vaccination rates assumed.
Yeah, they're now assuming around 20% uptake in the U.S., lower than previous years, but they still expect similar market share and pricing.
And they got that positive opinion for the new booster in Europe.
Right, the positive CHMP opinion for the LP.8.1 variant adapted booster. That keeps them competitive in that evolving market. It's still an important contributor, even if oncology is the future focus.
And quickly on leadership, a new CFO started.
Yes, Ramon Zapata Gomez took over as CFO on July 1st. His focus is stated as financial discipline and value generation, which fits perfectly with the cost management we're seeing.
And the chief strategy officer is leaving.
Yeah, Ryan Richardson, who's been there a long time, is departing in September. So a bit of a changing of the guard, perhaps reinforcing that focus on capital efficiency and the new strategy.
Okay. Looking ahead then, what are the key catalysts investors should have on their radar?
Well, near term, we've got the European approval and fall launch of that new COVID booster, likely this quarter, Q3.
Okay.
Then the formal closure of the CureVac deal should happen in Q4. Also in Q4, they plan to start phase 2 studies for BNT327, expanding its reach. So a pretty busy end to the year.
And then there's that AI day they mentioned. That sounds intriguing.
It really does. October 1st, 2025, they're promising a full pipeline visibility refresh.
What are you hoping to see there? What would be a real needle mover beyond just listing programs?
Yeah, good question. I think we need more than just a list. I'm hoping for concrete examples of how AI is actually accelerating their drug discovery or development.
Like specifics on lead optimization or patient selection.
Exactly. Or even manufacturing. If they can demonstrate tangible ways AI is de-risking or speeding up these big oncology bets, that would be huge. Not just buzzwords, but real impact.
Makes sense. And longer-term readouts.
We're looking towards early 2026 for data from the registrational study of BNT323 in HER2 positive endometrial cancer, and also from the iNeST trial in adjuvant colon cancer. So plenty of important clinical data coming.
Okay, putting it all together in an investor context,
Yeah,
it feels like the message is getting through.
I think so. BioNTech is clearly communicating this transition. From COVID success story to a serious, well-funded immuno-oncology player.
Leveraging that cash, those partnerships.
Right. And the market's positive reaction, it shows growing confidence in this pivot. That huge BMS deal, plus the financial discipline we talked about that's resonating.
And the call option activity suggests some investors see significant runway ahead as this oncology pipeline matures.
Definitely a bullish undercurrent there. It also helps that their focus aligns with recovering sentiment in the broader biotech sector, even if the XBI is still choppy. They offer a potentially more stable growth story now.
And fundamentally, those big deals, BMS, CureVac, they significantly de-risk the R&D path, right?
Hugely. They get funding and expertise without constantly tapping the equity markets. That's a massive advantage in today's environment where funding can be tough for smaller biotechs.
All right, let's shift gears. It's time for our not financial advice segment. Think investment committee brainstorm, outrageous but plausible ideas. Remember, everyone, this is purely for discussion and entertainment.
Disclaimer noted.
Okay, pitch number one. Let's call it the leveraged leap. We go long BNTX, but not just stock. We use a long-dated EPS call spread. Maybe something like the January 2027 121.40 call spread.
Okay, January 27, 121.40 calls. What's the thesis?
Thesis is simple. That massive cash pile, nearly $16 billion, plus the upcoming catalysts, especially that AI Day pipeline refresh, and the Phase 3 readouts for BNT327 could trigger a major re-rating.
As the market starts valuing it more like a pure-play oncology company.
Exactly. The call spread captures significant upside if that happens, if the pipeline delivers, but it limits your initial cost and risk compared to owning the stock outright. You're basically using that fortress balance sheet as downside protection while playing for that multiple expansion.
Interesting. Using options to leverage the potential re-rating. Okay, I like it. Pitch two.
Pitch two. The fortress balance sheet paired trade. This one's a bit more complex. You go long BNTX stock, but you simultaneously short a comparable earlier stage pure play oncology biotech. The key is choosing one that doesn't have BioNTech's cash hoard or a big pharma validation deal like the BMS one.
Ah, so playing the relative strength.
Precisely. The thesis is that in this high-rate, volatile funding world, BioNTech's cash and de-risked pipeline give it a massive competitive edge. They can accelerate, maybe even acquire assets on the cheap.
While the less capitalized peer struggles for funding or faces setbacks.
Exactly. It's a bet on capital strength and execution, winning out in a tough market. You're betting BioNTech pulls ahead of the pack, potentially benefiting from other struggles.
A relative value play based on financial strength. Also compelling. Good pitches.
Okay, so wrapping things up, BioNTech's Q2 call wasn't just about beating numbers. It showcased a clear, confident, and very well-funded strategic pivot into becoming a major immuno-oncology force.
Yeah, it's a fascinating story of leveraging that incredible pandemic success to build something potentially even more impactful and sustainable in cancer treatment. It's like they're saying, okay, phase one complete, now on to the next big challenge.
It really is. So here's a final thought for you to consider. As BioNTech pushes towards new standards of care in oncology, especially with these novel combo therapies and with their AI initiatives coming up, what breakthrough could really redefine cancer treatment?
And perhaps more importantly for investors, how much of that truly long-term transformative potential is actually priced into the stock today? Is the market still underestimating the ultimate upside here?
Definitely something to mull over. And just one last time, remember, everything we discussed today is for informational purposes only. It is absolutely not financial advice.
Please do your own research.
We hope these insights help you dig deeper into BioNTech's strategy. Thanks for tuning in to Talk Tickers.